Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media, like I normally do, generally related to three different topics: wealth building, commodities, and or financial topics. I'll interject my financial opinions as we go. So let's dive in there and see what's going on. If you want to follow me at Finding_Finance, if you want to join our community, finding-value.com, where we dive deeper into financial topics, looking for investment vehicles like individual stocks, businesses, and value opportunities in the market. And we do have a discount coupon code MAYDAY, MAYDAY, if you're interested in joining. And we have a 7 a.m. question and answer session coming up this weekend. So Brandon says, I'm glad copper, gold, and silver are down 3 to 5% today. It shakes out all the paper hands and transfers wealth from the impatient to the patient. If you're not excited about buying this dip, you don't know commodities, man. That's what he is saying with respect to copper, gold, and silver. Michael Green says, a hypothesis, oil and copper. So we've got oil in the light blue, and we've got copper in the orange. And we've got copper ripping. Is oil going to follow suit after it? Well, if those relationships in history do hold true, oil would be ripping to the upside. I know some people in the comments section, they're like, well, how come oil's going down? Well, I mean, this chart, I would say, kind of, if this relationship holds true, oil generally lags behind gold. Think 18 months, 18, 19 months. Copper will also be, you can see, the one that moves up first, and oil kind of lags behind it. So we'll see if that relationship holds true. And that's what I'll say there. And another thing I will say, short-term price movements, depending on how big they are, do not are not an accurate representation necessarily of the fundamentals in the longer term. So short-term price movements cannot be an explanation for something that is occurring on a longer-term basis. So you're going to have these waves that come. This move lower, you'd say, well, oil demand got killed, but that was not the case. Oil demand continues to go up, and we flooded the world with strategic petroleum reserve barrels, a lot of them from the United States, but from also other ones in the world. But overall, I would say the macro fundamental picture is what drives oil, copper, gold. It's more of a financial related aspect of credit expansion than anything else. Rock Bottom Entry says, this is for silver. U.S. yields are about to roll over along with the dollar. The Fed pivot is coming sooner than most expect. This will likely provide the spark that ignites a parabolic silver squeeze and melt up in the miners. I do agree that yields rolling over along with the dollar is definitely going to be a big move higher for the precious metals. I totally agree with that. So the question I ask is, are we actually going to roll over? That's what we're kind of all waiting for and seeing. We do see weakening in momentum in terms of the relative strength indicator making lower highs and kind of rolling over. So it is a possibility, but we haven't broken, I would say, this key trend line that we've got going up. That still needs to be broken. And we're still kind of waiting for this thing to roll over. So are we going to get lower rates? And when we do get lower rates, gold and silver, I think, are going to crush it. I also think that gold and silver are moving higher and are anticipating lower yields already. So I think this is all kind of in motion at this current time. Willem says, a normal Honda Accord needs about 40 pounds of copper. The same battery electric Honda Accord needs almost 200 pounds of copper. We show in the paper that the amount of copper needed is essentially impossible for mining companies to produce. So what's going to happen there? Well, my guess is electric vehicles will not be adopted at the same rate that what most people think they will be adopted. We'll probably have to go to hybrid vehicles or something else than complete full battery electric vehicles based off of copper supply. That could be one outcome, and I think that's probably the likely outcome. And what he says here is 6 new large mines need to come online annually by 2050 to meet the global copper demand. Brennan, and I don't know why, I've seen multiple things coming, and I don't know why this is showing up on my thing. So I said, okay, fine, I'll retweet it or whatever. It says only 3% of men are over 6 feet tall and make $100,000. I know a lot of people that are over 6 feet tall that make over $100,000. I mean, I do. My brother does. My two of my best friends in high school do. My other friend Andrew here, he's over 6 feet tall and makes over 100 grand. I mean, yeah, the guy I visited yesterday, he's 6'4" and makes yeah, he's over 100. I know like 7 or 8 right off the top of my friends that are real close friends that all meet that requirement, and maybe we just all hang out together. I don't know. I know a lot of really tall people. In fact, um, yeah, I just thought that was interesting there. EIA crude. So we have a little bit of a build, 1.825, Cushing's 1.325, gasoline's down a little bit, and distillate's a small build there so far in crude and Cushing. Japan's 10-year yield tops 1% for the first time in 11 years. Look at this move in Japan's borrowing cost here. Look at that. Notice something here, guys. I want you to notice something for those on the website. Look at this pattern. This is a double bottom. Draw a line across through here. We had that kind of lead-in pattern here. This lead-in pattern is the same as what oil has before the move. There is sometimes that this kind of does a washout move lower before heading higher. That does sometimes come. But this one played out pretty cleanly with a double bottom, and this is the stage 2 move, moving yields to the upside. So technically, this looks almost exactly like it should. Downward move to a big double bottom to that lead-in pattern to the move higher. Rick Rule Rhetoric says, it's interesting to me that nobody cared about silver at all at $24. And people are starting to care about it at $30, which is to say that people don't care about a narrative until the price action of the commodity has made the narrative less valuable. I wouldn't say that they care about it. I would have said it a little bit maybe different on the back end there. It says until the price action of the commodity has made the narrative less valuable. I think people in general just chase shiny objects. They chase the loud noise. They chase price movement. And the majority of people, they validate the price move. So when price moves, it validates or creates an opinion on that thing that moves. What I try to teach on the website is I try to teach that we are buying patterns. And then you have to be patient for the price move to come right kind of after that pattern. And it takes some patience. We can buy bottoms that way, where the herd is lining up a potential move. And you always get the largest returns buying a pattern at a bottom and having patience than you would where you are basically chasing the price movements because it finally, momentum finally shows up on some sort of indicator. And some of the technical analysis guys, they also do the same thing. They wait for like 7 breakouts before they buy something. And I go in, I just buy this stuff because I've got alignment with ratios. I've got alignment with maybe the fundamental picture and the market conditions where you've got an inverted yield curve, when the yield curve uninverts, silver generally goes up in that general area. So if you have all of the alignment there where the wind is at your back, you got the technicals looking good, why wouldn't you buy it? And then some people will say, well, what if it doesn't go up? Well, then I just wait. I wait for those conditions and the wind to take me downstream eventually. And that's all basically my biggest returns have been similar to that type of setup. You might not win at a certain time frame that people make up in their head. Let's say it's within 6 months or a year. Some of them may not do that, and other ones will. But the returns that you get are so asymmetric and lopsided in your favor that you start to change your investment strategies to favor that strategy because you can't replicate it. You can't get a 10 or 20 or 30x by waiting. If a stock is $1, you can't wait till $4 or $5 necessarily to get a 10 or 20 bagger in this kind of first push is what I'll call it. If you're going, after very long-term investments like Walmart, yes, you can wait a little bit, or Visa or MasterCard or these ones that work in, I'll say, a variety of market conditions and you hold it for 20 plus years. Okay, I get that. I'm talking about doing a 10 bagger in like 2 or 3 or 4 years. You have to buy real low. You have to wait for it to kind of bottom out, buy it off of technicals and patterns, and then wait for the herd to chase the shiny object to push the money flows into that sector. That's kind of how I've been viewing all this stuff. And Rick Roll is completely right here. JSG, the latest EIA comparative analysis through 5/22/24 calculated WTI fair value price of $77, or roughly in line with current market pricing. Current second quarter build in line with 10-year second quarter average. So that's what we've got right now. We're basically at fair value for oil at the current time based off of commercial inventory levels. And this is your dot plot providing that data or evidence for it. John says the dating disconnect, and this is another one, the percentage of men who are 25 to 45 over 6 feet tall make that and can run a sub 8-minute mile. Of the people that I know, I would say only one of us could not run under an 8-minute mile. I can, my brother can, Andrew can, Alex, the other guy, he can. Ryan he'd probably be very close. And we're all 40. Well, one of us is 32, but all of us are like around 40-ish years old. So we can all do that, and we all meet this requirement. So I doubt it's 0.01%. I highly doubt that. Highly, highly doubt that. 8-minute mile. I ran a 6-minute mile when I was 11 years old. 6 flat. 6:02 to be exact. Nothing to see here, boring in a good way. We continue to see an $80 floor with upside to $90 by year end. $80 WTI plus a weak loonie, 37% revenue uplift plus tight price differentials equals record free cash flow, and with debt levels met equals record buybacks. Eric remains bullish, and this is the big three inventory levels. You can see 2024 is very similar to 2018 that we're kind of riding over in the green here. We also have 2023 that was riding down right below us. And then the one way at the bottom here is 2022, I think. Yeah. He remains bullish, and we're still below the 5-year average. Jesse says a potential breakout of the silver to S&P 500 ratio is taking place. The last time this occurred from oversold conditions, silver rallied 16x. It went from $3 to $50. And this is a double bottom that we've got going on. This is 1999, 2000, 2001. And then we've got a potential breakout here where we're basically in the middle of this breakout against the S&P 500. Silver is. So everything is occurring. We've got a little bit of a pullback going on, it looks like, in the short term. But longer term, everything remains looking quite good for silver. Here's GDXJ divided by gold in US dollars. It's working on a 13-year breakout in this miners to gold ratio. This is a really big deal because we're coming from such undervalued levels of GDXJ. Now, the juniors generally lag behind GDX and or XAU. XAU is already broken out. That's kind of our leader. I would expect this to break out here at some point very soon. Then the juniors are going to start to outperform. The juniors can do crazy stuff. And I am looking at potential investments in the junior mining companies. I'm in a lot of them, and I share those on the website. So here's silver, says above the red line on a yearly closing basis, and all bets are off. So this is silver price on a 12-month line chart for log scale. We've got this coming on up, and we're real close to a yearly close where we basically break the big cup and handle pattern that we have been watching. The cup and handle starts in 1980, the top here, the cup, and then the handle and the potential launch pad he's got here for a break in silver. And this is the very long period stochastic relative strength indicator. And we are turning into a positive posture for silver to break. Looks really good for silver. That's a big picture view picture. Silver and sugar track each other quite well, very big picture. Silver's now in a historical breakout mode as expected. Sugar should follow silver for its own mega breakout, which will be further evidence for a second inflationary wave is starting. And you can see sugar overlaid on top of silver here. Sugar is the candlestick chart, and then silver is the light purple, moving on up, purple or pink. It says the mother of all legit looking massive twin cup and handles. That's also this pattern here that we've got breaking out. So sugar looks good. That's also following silver, or silver's following sugar, however you want to look at it. And silver on the yearly chart is looking fantastic. Here's Digger, another one for silver. And what he's noticing is, this is incredible. Here's the Livermore accumulation cylinder for silver. The similarities are striking. And this, he has a much shorter period, which is February, March, April, May. And he's got a 1, 2, 3, 4, 5, 6, 7 in a potential break, or maybe we break way out the short term. And Livermore, he was known as one of the better traders, not really investors, but traders. He went and made a lot of money, went broke, made a lot of money, went broke, made a lot of money, went broke. A lot of these traders, they have very large swings. They capture some stuff, and then they generally give it all back to the market. But he basically wrote and noticed this pattern or cylinder before big moves, and we potentially could have in silver. Lawrence McDonald says commodities before the first rate cut. As the Fed opens the door to a softer path, remember that the Bloomberg Commodity Index leads the Consumer Price Index. And here we are rolling on up for the Bloomberg Commodity Index, which is a move first before the CPI follows. So that's looking good. Silver in Shanghai is $39 an ounce. China wants silver and lots of it. So Katusa says, silver rallies in China as investors drive prices to decade highs, betting on increased demand. Shanghai's yuan priced futures surged over 6%, hitting a record of 8,733 yuan per kilogram, which is $39 an ounce. And look at this breakout that they've got going back to 2012, just a major ripper here of a breakout. Looking really good in Shanghai or China. Christopher Aaron, another one. And these are, a lot of these are silver. It says silver breakout alert. Silver has broken key horizontal resistance at $30 an ounce. Our official target for him is $42.50, which will then see a psychological pull towards the $50 level. Meanwhile, We just purchased a new silver miner last week before the breakout. In the last 3 days, as silver is higher by 8%, this miner is higher by 32%. What do we think is going on or going to happen as silver approaches 50? I think these junior silver miners are going to go crazy. Here's what he's got for silver, potential move. I've watched this guy before. He's done a lot of these potential targets. A lot of the times they've been wrong. But this is the silver miner just showing the leverage that you can get in some of the silver miners. And I'm in the silver miners too, the juniors specifically, and in some of the mining companies. And I'm riding this train right here with everyone else. Grady says, and this is I like this chart here. I'm glad that he posted this, and I'm glad that he so openly shares some of this stuff. I think that this is a tell of what is coming, because when rates go lower, generally you'll see emerging markets and other currencies and we'll call it commodity countries, do very well. So check out this setup here on all 4 of these charts. He says BRICS Plus will be taking over the global scene from the West. Gold-backed currency, own global institutions, killing petrodollar, oil for gold deal, real cooperation, alternative world order, and new payment systems, etc. These charts mirror a global shift is coming. I agree with them. So this is CEW. CEW is the Wisdom Tree Emerging Currency Strategy Fund. What do we see here? We see a broken trend line. We see a pattern as well that was a squeezing up pattern. And it's broken the top trend line to the upside with a nice big bullish engulfing recently. So this is CEW, the monthly 12-year chart, emerging markets currencies versus the US dollar. And this is what you see when commodities run. You see a weak dollar and you see emerging markets break out. It's exactly what we're seeing here. We go to the next chart. This is EEM. This is the Emerging Markets ETF, MSCI. And we are seeing a double bottom breakout occurring here in the short term. Remember, these might take some time to play out, but we're going to work our way on up, is my opinion. Here's another one. This is the Shanghai Stock Exchange Composite Index. What do we see here? We see a massive squeeze into a corner here. We have a false breakout to the downside. You know why all those guys are buying China? It's this chart that they see. Now you're seeing it. This is an 18-year symmetrical triangle, should hold some serious energy. These charts that I'm showing you right here are also evidence that the dollar is going to break down sometime soon. And yields will probably roll over at some point. Now, what's the exact point? I don't know that. Don't know the exact point, but it's coming soon. And here's EEM versus the SPY, the S&P 500. So that's a very good-looking 17-year blue bullish falling wedge. Tells us that the odds for a major shift in the general stock market is high. A timely shift towards emerging markets. We've always seen emerging markets do very well when the dollar drops. What could cause this move here? A very fast spiking yield in America. A yield that moves faster than all of the other currencies and countries would create a stronger dollar, which would pull this into a false breakout. So he says a very probable false breakout in the making. Look for an end around the apex move, my own term, around the pattern here to come back up and break to the upside. So I agree with them. And these are all evidence. All 4 of these charts are evidence that a potential weakness in dollar, and the weakness in the dollar is going to strengthen other currencies against the dollar, like the Canadian dollar and stuff like that. Another one from Grady says this silver roadmap chart posted in 2019 is still showing the way. He said that silver was getting ready and now it is broken above the blue line plus is above the black thin line. Bull market price objective is $370 an ounce. but could briefly go double that in a parabolic move at the end of the bull market. So he's got, in his opinion, we'll work through this chart here. He says, see if here. So this is the Kondratiev wave, high and low. The chart shows the largest so-called long cycle I track, the Kondratiev wave. So this is KWH, very right translated equals bullish. Silver quarterly 50-year chart. The fifth Kondratiev wave, K waves, have lasted 54 years on average. It says the possible time span for the fifth K wave to top is somewhere between 2028 and 2040. That's the green line of the potential top. He says the price target 370 could also go much higher briefly at the end of the bull market. He says if right translated, then we top beyond 2028, which would be very reasonable for this bull market. And we top in 2034 if the fifth K wave is similar to the fourth K wave, in his opinion. So that's kind of what he has going on for potential moves in silver. And I know that sounds ridiculous, but that's also why I'm so bullish on silver, is because this big pattern that we've got going on it could be so explosive. And it's going to require patience for all of this to play on out. So what I've done is I've bought my little silver junior companies. I'm going to ride this thing, guys. I'm going to ride it on up. Now, I also own a bunch of physical metal because with that type of move, which I do think is coming, there's no reason for me to speculate with all my money in small junior companies. We've got natural gas versus Dow Jones Industrial Average, cheap and looks the same as the last bull market in terms of positioning where we're at. So we can see a big move here in natural gas and an outperformance of the Dow Jones against, I should say, natural gas outperforming the Dow Jones. So that looks good there. We've got crude oil versus the M2 money supply ratio. Chilling at the moment after it's broken out of its consolidation pattern. And there it is, a big consolidation pattern that we've broken out, and it's just chilling, going sideways. This will go way up, in my opinion. Could we get a pullback in the short term? Very well could. Very well could. I'm not here to know the short-term market price movements, but I think this is going to ultimately end at a much higher level. We've got gold to M2 money supply is making progress higher. If the right market condition comes, which I think they are, we could see gold really revalue itself against the money supply like the 1970s. The chart is a double bottom on this ratio. Long way to run. Silver to M2 money supply is in the same situation. So this is gold divided by the M2 money supply. And we could see that under a high inflationary, increasing interest rate environment, which the 70s were, we saw a revaluation of the gold price in relationship to the M2 money supply. We came all the way back up here. To me, this looks like a big double bottom, and we've broken through the right-hand side, the downtrend line, and we are starting to work our way on up with gold accounting for the money supply. It means that similar market conditions are today like the 1970s. Market conditions is what the herd is subjected to. Inflation and increasing interest rates is what I'm specifically talking about. And I'm talking about a longer, bigger picture view move, not the short term. And silver against the M2 money supply is in the double bottom as well, and it's in a very similar situation as gold, working its way on up. Looks very good. And then we've got silver here, silver on the short-term time frame hitting up against some resistance. Is it going to break out again? Question mark. And this actually came all the way back down and broke down. I don't think people want this to break out. People, Federal Reserve, governments, they need an orderly move. They need to slow down the move in silver and gold. They don't want it to go up uncontrolled, which means they're going to lose control of the markets. Did they come in there? I don't know. I really don't know, but we did pull back from this, just an FYI. But that's what I've got for today, guys. We'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys are interested. Mayday coupon code as a reminder. We have a 7 a.m. question and answer session coming up, and that's what I've got for today. So we'll catch you guys next time. This is Finding Value.